Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, so you got new all-time highs in the NQ, fairly consistently. You've got we've gone as high as 2480 in the overnight. I'm finally getting over this cold, which is why I haven't been doing a lot of content during the day because I just really haven't had a voice. So you can see the upper band kind of running away. And that's what happens. Like I see people on Twitter that don't know what an upper band ride is and don't really know what the hell they're talking about, saying we're getting ready for another upper band ride. No, we're not. That's not how it works. So you've got the 9-day simple moving average. You do a band ride, you pull back, they hold the 9-day. You're making all-time highs, but the band continues to run away. That's because the E-mini operates on a function of trading from the upper band to the middle band to the lower band, either as a function of time or as a function of price. The middle band is still stuck down here in the 47 area. So the end of this week, the beginning of next week is going to be about, can the bulls continue to hold the 9-day simple moving average? If they can, then we can shelf here and do some tight ranges between, say, 70 and 82, 85. That's absolutely, and that would frustrate a lot of people. It would frustrate everybody that's looking for a top to short because we would be doing a bunch of little false pullbacks. It would frustrate the bulls because they would be looking for the next leg higher and they just can't quite do it. So the fact that we had a really compressed range day yesterday and that the overnight is pretty compressed, it's it's a 5.5 handle range. If that persists through the day, then we may risk doing a little bit of shelving here while the 20-day catches up, while the mid-band catches up, and while we decide what the next move is going to be. So you go to the hourly chart, and you can already see it just kind of flattening out a little bit. The hourly was support. Here's your dip buy post-Fed. So we moved down a little bit after the Fed, but not enough to convert anything. Your pre-FOMC price is 73.75, and on any move down today, how price reacts to that 73.75 number is going to be important. I really wanted to see them close Globex yesterday below the 73.75. What I said in the room was if they were able to do that, then at least the bears would be present. They weren't able to do it, and you can see that the bears are clearly not present as we go do another all-time high. So 73.75 is going to be important. Then you get back into 66, 67 support, and you still got the weekly pivot way down here at 64. So the moral of the story is when you come into Monday and you try to take out weekly pivot and you can't get it done, and then you make a higher low on Tuesday, when the market is trading this way, it's the same thing I said a day ago, 2 days ago. When the market is trading this way, you tend to get stairs up. And then if you're trading near all-time highs, you tend to get another all-time high as you get into the latter part of the week, which tends to be the directional part of the week. If the bulls want to make a statement, then they hold hourly midband. They hold 73 to 75. They take out 80 in a big way. There's really not much else for them to do. All you can do if you're the bulls when you're at all-time highs is to keep making all-time highs. But they have to defend the pre-FOMC price. They have to defend 73.75. All right, everybody have a fantastic day. I will catch you in a little bit with an update. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.